record in 2017. This reflected greater than expected moderation of activity in some advanced economies, particularly in the Euro area and United Kingdom. Global growth is projected to be maintained at 3.7% in 2018 and 2019, same as in 2017. Growth in advanced economies is expected to increase very marginally from 2.3% in 2017 to 2.4% in 2018, largely on the back of strong growth in the U.S. economy, which benefited from sizable fiscal stimulus. Growth in emerging markets and developing economies was steady in the first half of 2018, supported by continued stronger growth in emerging Asia, despite the moderation of activity in China. Growth in the emerging markets and developing economies is projected to remain steady at 4.7% in 2019, same as in 2018 and 2017. In sub-Saharan Africa, growth is expected to increase from 2.7% in 2017 to 3.1% in 2018 and further to 3.8% in 2019, boosted by oil exporting economies which benefited from higher oil prices. Inflation. Mr. Speaker, global inflation increased in the second quarter of 2018, largely reflecting higher energy prices. Core inflation, excluding food and energy, remains below target in most advanced economies, while in emerging markets and developed economies, core inflation has inched up in recent months. Commodity prices. Mr. Speaker, commodity prices generally continued to strengthen in the mid-quarter of 2018. Oil prices increased to about $76 a barrel in the first half of 2018, the highest since November 2014, but declined to about $71 in October 2018, following increased oil production by the major exporters. Mr. Speaker, the world market price of cocoa beans is estimated to reach $2,200 per metric ton in 2018, compared to $2,025 in 2017, to an average of $1,346 per ounce in 2018, before falling slightly to $1,302 in 2019. Financial conditions. Mr. Speaker, the monetary policy normalization in the U.S. led to a stronger U.S. dollar and rising yields on U.S. Treasuries, resulting in tighter financial conditions and capital flow reversals in a number of emerging markets and frontier economies, including Ghana. Despite these developments, global financial conditions remain generally supportive of growth. Domestic macroeconomic performance. Mr. Speaker, the performance of the economy for the first 9 months has been impressive. To properly assess the performance, let me first the macroeconomic targets set for 2018 as presented in the 2018 budget. Overall rate of 6.8%, 6% in the rebase series, non-oil growth rate of 5.4%, 5.8% in the rebase series, end period inflation of 8.9%, fiscal deficit of 4.5% of GDP, 3.7% in the rebase series, primary surplus of 1.7% of GDP, 1.4% in the rebase series, and gross international reserves to cover not less than 3.5 months of imports of goods and services. Mr. Speaker, data as they end September 2018 shows that the economy is in good shape and we are on track to meet our targets. Real GDP grew by 5.4% using the rebase series, 6.8% in the first quarter, in the first half of 2018 compared to the annual target of 5.6%. Non-oil GDP grew by 4.6% compared to the 2018 target of 5.8%. End-year inflation rate declined from 11.8% at the end of 2017 to 9.8% at the end of September 2018, and further, Mr. Speaker, to 9.5% as at October 2018. The fiscal deficit was 3% of rebased GDP at the end of September 2018, compared to a target of 2.7%. The primary balance was a surplus of 0.5% of rebased GDP, compared to a target of 0.9% of rebased GDP for the period. The public debt, including the financial sector bailout costs, at the end of September 2018 was 57.4% of rebased GDP, excluding bailout costs. The debt was 53.9% of rebased GDP. As of September 2018, the monetary policy rate dropped from 20% at the end of 2017 to 17% at the end of October 2018. The provisional trade balance for the period recorded a surplus of 1.6 billion to a surplus of 777 million recorded for the same period in 2017. Gross international reserves accumulated to 6.7 billion, sufficient to cover 3.6 months of imports ahead of a 2018 target of 3.4 months. The exchange rate, which appreciated against the dollar up to May 2018, depreciated by 7.5% at the end of September 2018, largely on account of external pressures, including the strengthening of the US dollar, the US-China trade war, and the US Fed policy rate hikes. Compared to other emerging economies, Ghana has been able to weather the storm a lot better, primarily due to strong economic fundamentals. Mr. Speaker, the detailed performance in the real monetary, external, and fiscal sector of the economy is provided below. Mr. Speaker, the 2018 budget envisaged a 6.8% GDP growth rate. However, with the rebasing of the GDP, there has been the need to revise the 2018 growth projection. Thus, the overall GDP growth target has been revised to 5.6%, taking account of the base effect of the GDP rebasing and half-year performance. Non-oil GDP is projected to grow by 5.8%. Mr. Speaker, provisional estimates by the Ghana Statistical Service show that economic growth remains strong in 2018. Real GDP grew by 5.4% during the first half of 2018, then oil by 4.4% and 4.3% in the first and second quarters of 2018, respectively. Monetary aggregates and credit development. Mr. Speaker, broad money supply, including foreign currency deposit M2+, grew by 24.1% year-on-year at end September 2018, compared with 23.1% over the same period in 2017. The pace of expansion in banks' total outstanding credit increased in the 12-month period to September 2018. Total outstanding credit increased by 13%. Was absorbed by the commerce and finance, services, transport and storage, communication, and manufacturing subsectors. Mr. Speaker, money market interest rates generally trended downwards in 2018, reflecting the reduction in the monetary policy rate and general improvements in macroeconomic fundamentals. However, the 91-day Treasury bill rate increased to 13.37% in September from 12.8% a year ago, while the one-year note firmed up to 18% in September 2018, and lending rates of the deposit money banks also went down generally. Mr. Speaker, the Ghanaian cedi came under pressure in the second quarter of 2018, following the strengthening of the US dollar in international markets. These developments resulted in tighter financing conditions and capital flow reversals in a number of emerging markets and frontier economies, including Ghana. Domestic demand pressures for foreign exchange, as well as speculative trading, were also contributing. Mr. Speaker, the cedi stabilized in the third quarter, benefiting from positive sentiments on the market as a result of the cocoa syndicated loan and Bank of Ghana's competent management of our resources. Mr. Speaker, these external sector developments resulted in a drawdown of the country's gross international reserves by $798 million to $6.8 billion at the end of September 2018. This was sufficient to provide for 3.6 months of interest cover compared to 3.9 months of cover in December 2017. Fiscal developments. Mr. Speaker, our overarching fiscal policy objective over the past 2 years has been to consolidate our public finances as a surer path to a declining debt burden. With this in mind, the 2018 budget set the overall fiscal balance as a primary anchor and targeted a reduction in the fiscal deficit from 4.8% of rebased GDP, 5.9% of old GDP in 2017 to 3.7% of rebased GDP, 4.5% of old GDP in 2018. At the same time, the fiscal framework was calibrated to yield a larger primary surplus relative to the 2017 outturn and ultimately lower the rate of debt accumulation. Mr. Speaker, to safeguard our fiscal policy objective for 2018, government presented a package of revenue measures to this august House during the mid-year fiscal review of the 2018 budget statement and economic policy. These measures took into consideration the need, first, to improve the sluggish revenue performance of the first 5 months of the year, and second, to address the low non-oil tax-to-GDP ratio as compared to peer middle-income economies. Specifically, GET Fund and NHIL were decoupled from the input-output VAT mechanism and converted into straight levies, with rates remaining at 2.5% each. A luxury vehicle levy was introduced and an additional personal income tax band of income in excess of 10,000 Ghana cedis with a 35% tax rate. Mr. Speaker, provisional data on government fiscal operations from January to December 2018 indicates that domestic revenues grew by 15.9% on an annual basis and reached 31.7 billion compared to 27.3 billion during the same period in 2017. However, total revenue and grants was 9.5% below target. On the other hand, expenditures were generally lower than programmed, although some overruns were observed on specific expenditure lines, including use of goods and services and wages and salaries. These operations resulted in a fiscal deficit of 3% of rebased GDP compared to a deficit target of 2.6% of rebased GDP for the 9 months. Mr. Speaker, the fiscal deficit was financed from both domestic and external sources and included a drawdown in government deposits with the Bank of Ghana. Total domestic financing amounted to 4.2 billion, of which net financing from the domestic market operations amounted to 6.5 billion. Total net foreign financing amounted to 4.9 billion and included inflows from the issuance of the 2018 Eurobond. Mr. Speaker, the primary balance recorded a surplus of 1.5 billion or 0.5% of rebased GDP, albeit lower than the target of 2.8%, 0.9% of rebased GDP. Petroleum receipts. Mr. Speaker, government receipts from crude oil liftings for the first 9 months of 2018 from Jubilee, TEN, and Sankofa fields amounted to 604 million. Mr. Speaker, out of petroleum receipts of 723.55 million, GMPC, the NOC, was allocated a total of $223.43 million US dollars, comprising equity financing costs of $149.72 million US dollars, and its share of the net carried and participating interest of $73.71 million. The ABFA received a total of 176.33 million, while the GPFs received 323.79 million. Mr. Speaker, the nominal public debt stock at the end 2018 was 170.8 billion, comprising external and domestic debt of 86.6 billion and 84.1 billion respectively. The overall rate of debt accumulation in 2018 is 19.8%, driven primarily by the cost of the cleanup of the financial sector involving resolution of 7 defined banks. The rate of debt accumulation would have been 11.5%, the lowest in 10 years without the cleanup exercise. Mr. Speaker, public debt, including financial sector bailouts, as a percentage of GDP stood at 70.7% at the end of September, compared to 69.2% during the same period in 2017. The public debt, Mr. Speaker, however, excluding the financial sector cleanup, as a ratio of GDP, is 66.5%. In terms of the rebased GDP, the public debt to GDP is 57.2% and 53.9% excluding cleanup costs. Mr. Speaker, in 2018, we continue the cleanup of a heavily indebted energy sector. Following the establishment of the ESLA bond program in 2017, government has steadily settled over 5 billion cedis in legacy debt and age payables towards the goal of a financially viable and competitive power sector. An audit exercise is currently underway to validate the age payables that were not considered under the ESLA bond program. Once confirmed, government will intervene with a combination of cash and bonds to pay off the valid debts. This measure will improve the liquidity position of the energy sector SOEs and ensure long-term financial viability. Mr. Speaker, a total amount of 3.5 billion was programmed to be collected in energy sector levies in 2018. At the end of September 2018, an amount of 2.3 billion was collected and lodged into the established and other ESLA accounts. Mr. Speaker, from January to August 2018, a retap on the 10-year ESLA bond was effected of 615 million Ghana cedis and 264 million respectively, bringing the total value of ESLA bonds issued to 5.8 billion. Energy sector SOE debts amounting to approximately 5.6 billion have been settled to date from these proceeds. Partial securitization of mineral royalties. The 2018 budget announced government policy of securitizing future mineral royalties to support current developmental needs. In September, Parliament passed the Minerals Income Investment Fund Bill into law. The objective is to hold and manage the equity interests of government in mining companies and receive mineral royalties and rents due government. Accordingly, the fund will set up an SPV to raise funds by way of initial public offering through a dual listing on the Ghana and London stock exchanges. Government expects to raise up to $750 million from the IPO. The transaction advisors for the IPO have begun work in earnest. Mr. Speaker, I turn now to the medium-term macroeconomic targets. Following our significant achievements in stabilizing the economy, government will continue to pursue prudent macroeconomic policies to provide a stable environment for expanding economic opportunities and for promoting inclusive and job-creating growth and development. Mr. Speaker, consistent with the Public Financial Management Act 2016, Act 921, we will pursue our growth objective without compromising fiscal consolidation. We will reduce the fiscal deficit to make the overall debt burden sustainable. We will pursue prudent monetary and external sector policies to keep inflation under control and achieve sector policies for favorable current account balance to underpin exchange rate stability. Mr. Speaker, we have set the following medium-term 2019-2022 macroeconomic targets consistent with our objectives. Overall real GDP to grow at an average of 7%, non-oil real GDP to grow at an average of 6.6%, inflation to be within the target band of 8 plus or minus 2%, overall fiscal deficit to remain within the fiscal rule of under 5% of GDP, the primary balance to be a surplus of at least 1% of GDP, and gross international reserve to cover at least 4 months of imports of goods and services. Mr. Speaker, based on the overall macroeconomic objective of sustaining and restoring macroeconomic stability and pursuing inclusive growth and job-creating programs, the following targets have been set for the 2019 fiscal year. Overall real GDP growth of 7.6%. Non-oil real GDP growth of 6.2%. End period inflation of 8%. Fiscal deficit of 4.2% of GDP. Primary surplus of 1.2% of GDP. And gross international reserves to cover not less than 3.5 months of imports covered. Mr. Speaker, we now provide details of the medium-term outlook for the real, fiscal, monetary, and external sectors of the economy. The real sector. Overall GDP is projected to grow by 7.6% in 2019, while non-oil GDP is projected to grow at 6.2%. In terms of sectorial growth, the agricultural sector is expected to grow by 7.3%, the industry sector 9.7%, and the services sector 6.1%. Mr. Speaker, to bolster our resolve to maintain fiscal discipline, government will soon submit a bill to this August House with the main objective of ensuring that the fiscal deficit is capped at 5% of GDP. Additionally, government will institute a fiscal council to further strengthen fiscal management. Resource mobilization for 2019. Mr. Speaker, total revenue and grants for 2019 is estimated at 58.9 billion, 17.1% of the rebased GDP, up from a projected outturn of 46.8 billion, 15.7% of rebased GDP. Domestic revenue is estimated at 57.8 billion, representing an annual growth of 25.5% over the projected outturn for 2018. Of this amount, non-oil tax revenue will constitute about 74.2% of domestic revenue and amount to 42.9 billion Ghana cedis. This estimate reflects the impact of expected improvements in tax compliance and reforms in revenue administration. Non-tax revenue, excluding oil, will amount to 6.5 billion, 1.9% of GDP in 2019, equivalent to 11.3% of total domestic revenue. Of this amount, 4.4 billion is expected to be retained by institutions as internally generated funds. In addition, as a result of the IGF capping, an amount of 282.2 million is expected to be paid into the consolidated fund. Receipts from upstream petroleum activities are projected at 5.4 billion in 2019, equivalent to 1.6% of GDP and representing 30.3% over the projected outturn for 2018. Grant disbursement from development partners are estimated at 1.1 billion, up from the projected outturn of 773.2 million Ghana cedis in 2018. Mr. Speaker, Total expenditure, including clearance of arrears, is estimated at $73.4 billion, equivalent to 21.3% of GDP, representing a growth of 27% above the projected outturn for 2018. Expenditure on wages and salaries is forecasted at $19.4 billion, representing about 26.5% of total expenditure. The wage bill is anticipated to reduce to 5.6% of GDP from 5.9% projected outturn for 2018. Expenditure on goods and services is projected at $6.3 billion, representing 1.8% of GDP. The annual growth of 38.8% reflects a full provision made to cater for the government's priority programs, including the flagship free SHS policy. A total amount of $18.6 billion has been estimated for interest payments of public debt. Of this amount, domestic interest payments will constitute about 77.8% and amount to 14.5 billion Ghana cedis. Government in 2019 will continue to implement the Earmark Funds Capping and Realignment Act 2017, Act 947, to reduce budget rigidities and create fiscal space to fund growth-enhancing expenditures. In this regard, transfers to statutory funds as well as all other earmark funds are estimated at $13.8 billion, equivalent to 4% of GDP compared to 3.5% in 2018. Capital expenditure in 2018. Capital expenditure is projected at $8.5 billion, equivalent to 2.5% of GDP, and a growth of 55.7% over the 2018 projected outturn. Of this amount, domestically financed capital expenditure is estimated at $3.2 billion, or 0.9% of GDP. An amount of $5.3 billion has been budgeted for foreign finance capital expenditure, and this will be funded by a combination of project grants and loans. Mr. Speaker, based on the estimates for total revenue and grants and total expenditure, the 2019 fiscal operations will result in an overall budget deficit of $14.5 billion, equivalent to 4.2% of GDP. Financing of the fiscal deficit will be from both domestic and foreign sources. Net foreign financing will amount to $9.7 billion, including a planned sovereign bond issuance of $9.6 billion. Total domestic financing is estimated at $4.8 billion. This will result in primary surplus of 1.2% of GDP. Mr. Speaker, the benchmark crude oil price for 2019 has been projected at $66.76 per barrel, in line with the Petroleum Revenue Management Act, Amendment 2015 PRMA Act 893. The gas price for 2019 is also projected at $3.99 per million BTUs. The 2019 benchmark revenue crude oil output is 63.4 million barrels, 173,764 barrels of oil per day. Mr. Speaker, the Ministry is proposing to this August House to allow it to exclude gas revenues to the tune of $181.80 million from the projected revenues for 2019, as we devise ways of getting VRA to pay for the gas supplied by Ghana Gas. Furthermore, as a measure to minimize the amount of gas produced in the SGN field for power production, government has decided to postpone the extraction of its share of the gas resources, royalties, and carried and participating interest, until such a time that we line up off-takers to consume the gas in here. These are prudential measures and should not be misconstrued to mean that the Ministry will not be pursuing the VRA's gas bills as required by the PRMA. Mr. Speaker, if this House grants us this request, the projected petroleum revenue for 2019 will amount to $1.1 billion US. This is made up of royalties of $227.1 million, carried and participating interest of $602.8 million, carried income tax $249.6 million, and surface rentals of $1.1 million. Of this amount, $404.9 million will be ceded to the NOC for its equity financing costs, $320.1 million, and share of the net carried and participating interest, $84.8 million. $473 million allocated to the ABFA, while the GPFs receive $202.7 million. The GPF's receipts will be distributed between the Ghana Stabilization Fund and the Ghana Heritage Fund. Mr. Speaker, consistent with His Excellency the President's vision of transforming the Ghanaian economy, creating prosperity and job opportunities for all, and moving us to a Ghana beyond aid in 2017 and 2018, we launched a number of flagship programs that have yielded significant results. In 2019, government will consolidate and build on these programs. Mr. Speaker, rather than the traditional presentation of sectorial performance and outlook, the rest of my presentation is organized so as to highlight the key pillars of our 2019 budget, which takes bold and fundamental steps towards the President's vision. Mr. Speaker, the budget statement and economic policy for the 2019 financial year provides a detailed account of sectorial performance in 2018 and outlook for 2019. Here, I focus on 6 strategic pillars that build on the flagship programs and achievements of the past 2 years. Mr. Speaker, the strategic pillars of the 2019 budget are infrastructure, agriculture modernization, industrialization, entrepreneurship, improving efficiency in revenue mobilization and protecting the public purse, and social interventions. Infrastructure. Mr. Speaker, infrastructure, both hard and soft, is the backbone of economic development and growth, as well as a source of jobs and wealth for a majority of people. In a rapidly changing global marketplace, traditional infrastructure like electricity and power, transport and logistics, water and sanitation, roads, highways, and railways have combined with new, mostly soft infrastructure like digitization of government services to enable emerging economies like ours leapfrog the development path to prosperity. Mr. Speaker, this government will create jobs and prosperity and ensure value for money for Ghana, as well as position Ghana as a transportation, energy, petroleum, logistics, financial services hub in the region. Mr. Speaker, to ensure efficient management of infrastructure, we'll soon submit a bill to set up the Ghana Asset Management Corporation. Mr. Speaker, with your permission, I would like to inform Ghanaians on what we have done so far on infrastructure and the massive investments commencing in 2019. Mr. Speaker, in 2019, we will invest massively in the development of roads and infrastructure from a variety of funding sources, and the following projects have been identified to commence in 2019. Ashanti region. Ahia Kwanta Obuasi. Datano Ahokwa Suhenso. Ninahe Awisesu. Ninahe Chachere. Okonfwa Noche Obuakwa. Swami Interchange. Ofori Group Interchange. Manshia Submetro. Swami Sub-Metro, Tafu Prakrano Sub-Metro, Asokwa Sub-Metro, Kwadaso Sub-Metro, Ofuri Krom, Subin Sub-Metro, Inshiaso, Bantama, Mampong Inner City Road.